Yo, what's up guys? It's Justin back with a new video for you guys. Today we're going to be going over one of the most important ICT concepts and just understanding how the markets move, which is power of three. So we're going to be going over what is the power of three, what are the three different powers, why is it so important, and being able to prove to you guys in this video and show you guys that this is always what the market is doing. Power of three is how the market moves. We are either in one of these three phases. So let's jump right in and understand what are the three powers. The three powers of the power of three is accumulation, manipulation, and distribution. So we'll get later into this video exactly what these are, how we can spot them on the chart. But before we get into the charts, I want you guys to understand the market is always doing at least one of these things, either accumulating, having a manipulation move, or having a distribution move. And our job is to figure out which one of these is present and then using that knowledge to our advantage when taking some sort of opportunity. So let's get into what it looks like. So this is what I want you guys to pay attention to. This is what a normal power of three would look like. Notice, just before I start drawing these in, I want you guys to ask yourself if you can just spot, just by your intuition, of what accumulation, manipulation, and distribution means by this example. So this is basically what it would look like. Notice, this move, it always starts with accumulation. If we look at this point right here in price, we can see that price is accumulating here, right? We're not going anywhere. We're staying in this range. We're range bound. We're choppy. We're accumulating in price. Now, again, what happens after accumulation? Oh, sorry, let me change the color here. Is manipulation. So we come up, notice buy side is resting above these highs. We go to run all of these buy stops and sweep all of these traders, right? We're taking out all of the traders that were now short, and now all of those longs are getting positioned into just for then the market to move right back down, right? So this is the manipulation move. We come up, take out this buy side level after the accumulation, and this now becomes our manipulation move. So again, what happens after manipulation? Then we get the distribution move in the opposite direction of whatever the manipulation move was. So this is the basic understanding of the power of three: accumulation, manipulation, distribution. Now, I want you guys to understand the also why of this, right? What is actually happening here? So we know that the market likes to move, number one, just from the power of three, right? This is how the market moves. But markets also move to rebalance price, to inefficiencies, and also to have some sort of run on liquidity, which is we can get towards in a newer video. But notice in this example, most of the time when we have some sort of accumulation, the manipulation move is going to drive and run whatever liquidity, buy side or sell side, is a part of that accumulation. If we can notice here, we have buy side and sell side at these lows. Market moves up, run on buy side. So all of the traders that were now short trying to catch this move, right, but they're too early, they're now getting all stopped out in this position. So all of the people that were now short are getting stopped out, and all of the people that now want to go long are jumping into positions thinking that this is now a breakout to go higher. When in reality, this is just a power of three. We have accumulation, and everybody is now getting caught in the manipulation move, right? So one thing that I also like to add to this, and something that I don't see a lot of people doing, is using bigger time frame PD arrays to validate manipulation moves. So for example, if this is what we're looking for on a chart, I would like to see the manipulation move be inside some sort of bigger time frame fair value gap, right? Like a 4-hour fair value gap or a 1-hour fair value gap, whatever time frame I'm looking at, right? Price is fractal, but I would like to see possibly, a fair value gap getting manipulated into to then see the distribution move to, again, hopefully a bigger time frame draw on liquidity being somewhere down here, right? Like if there was a sell side here. So this is the basic understanding of power of three. Let's jump into the charts and look at some real examples. So this is our first example looking at the model here, right? Noticing the accumulation move here. We notice in price, looking at the 5-minute chart here, we have accumulation in price. Notice we don't really have a lot of volatility. We're not really going anywhere. We're kind of stuck in this range and price is choppy, right? But notice we're accumulating here before the price run on the higher area. So we end up coming down. We end up sweeping this little internal low here. ends up getting bought back. We take the high out. Now this is now our manipulation move. So what am I watching to see here in price? I'm watching to see displacement back to the downside, right? To see this move to validate that the draw on liquidity is now lower, which then becomes first is this sell side level, right? And then we have the distribution move to the lower side, right? Now, looking at this, we have accumulation, manipulation, and then, of course, what comes after? The distribution move to the downside, and you can see we end up selling off hard all the way to the lows, which is our sell side level right here. So again, notice accumulation, manipulation, and then we have that distribution move to the lows. So how would we trade this, right? How would we go about trading this? Now, me personally, the way that I like to use power of three is to validate an already existing buy or sell model or buy or sell program that I'm already looking to take advantage of. So if I'm looking at this chart right here, this looks like beautiful power of three. If I'm going back to replay this and look at this situation here, I'm expecting this to now be a manipulation move, but I'm not going to take any sort of position until I get displacement back inside the range that we were accumulating in. So notice, we get a big move to the downside here, retracing back. So this is now giving me confidence that the draw on liquidity becomes sell side, which is that most recent low. Again, we come up, we run all of these buy stops. All of the people that were short have now been stopped out. All of the people that just entered long are now stopped out. And now we're going to have the actual distribution move to the downside, which is sell side. So what do I look for? Is I look for an internal model. I then look to see a retracement back into some sort of PD array, which would be here. I see this 5-minute fair value gap. This is where I would like to see price get retraced into. And then this is where I would be looking to take a short entry with a stop either above the high or, the most recent high or whatever it is, targeting sell side as my first target and then targeting any external sell side. And again, if you want to tie in our standard deviation video, if you want to go back, even if you want more projections, find the manipulation move, which is, again, the most recent low to the most recent high that we had on the manipulation move. And this could also be a target for you, which would be the 2 to 2.5 area as a target, and then the 4 target as a runner. But most likely, I like to take the 2 to 2.5, especially when it aligns with a sell side level, right? So you can see we come up, entered in short. We come up one more time. Again, another internal model here would be internal buy side. All the people that are in shorts are now trailing their stops to these highs. Comes up one more time just to stop out all of these traders that were on this high. You could look to then add more to this position once we reject back down. And then we end up selling all the way down to sell side. And then let's see if price ends up going to our standard deviation projected targets as well, which we end up doing. And then notice exactly where we end up bouncing as well. Now, what I want you guys to notice as well is, again, these are tying in all these videos that I've been making, all of these models that we're starting to correlate and understand how markets move. If you watch the standard deviation video, what do you remember when price ends up reaching and respecting 2 to 2.5 or 4 on these projections? 2 to 2.5, if we come down here and bounce, what is most likely projected? We go back to discount of whatever that entire range is. You can see we end up bouncing back to discount of the entire range that we just sold. And then where do you think price ends up going to next? 4. Beautiful. Again, markets are algorithmic. The more that you think about what the market is going to do, the more that you will start to understand and figure out models inside of models and understanding how to trade it. So take a good look at this model here. This is a beautiful understanding of price action, right? We have, again, adding what we know. We have standard deviation in our arsenal. We have buy-side, sell-side liquidity, understanding the draw power of 3, which we just went over. Again, understanding the accumulation, waiting for buy-side to be swept. We have the manipulation move. We get displacement back down. We're anticipating to see a distribution move. I look for an entry to the short side, targeting my drawn liquidity, which is now sell-side, internal and external here. And I let my runners go and I catch this kind of trade. These are the trades that you want to be catching. So hopefully you guys enjoyed this video. This was a very simple understanding of power of 3. Tried my best not to make it too long, not to make it too complicated. So hopefully you guys understand this. Again, we did go over a little bit of other concepts, which was standard deviation in this video. If you want to understand what standard deviation is, I have a completely other video. I will link that in the description if you want to go check that one out. So If you guys did enjoy this video, please make sure to subscribe, put that notification bell on so you guys get updated whenever I create a new video for you guys. Also, if you want to see me trade live every single morning, I trade live in my Discord. We have a great community. We all boost each other up. It's crazy to see everybody grow. We're funding traders. I live trade on Zoom every morning. We have charting sessions every night. If you want to join that community, the link will be in the bio as well. So enjoy the rest of your day, guys. I will see you all in the next one. Peace.